Hello guys, and welcome to my YouTube channel once again. So in today's video we're going to analyze only synthetic indices and like volatility indices. All right, so we are going to analyze volatility 100 index and then volatility 75 index, 75 or volatility 50 index. Okay, so looking at this, you can see on the daily time frame, the market is currently at a strong key level. All right, a previous support zone that turned resistance. That's where the market currently is. So now we want to see what the market wants to do. All right, so we do not know the plans of the market. If it has plans to buy, to continue buying or to reverse from this zone. All right, we can only try to predict that by going to a lower time frame. Look at this zone is a very strong zone. You can see the market also bought from here and sold along the same zone previously. All right, so since we had previous sales from this same zone, there's a very high chance the market can reject from here and start selling. You can see the first time the market sold and broke below this zone from this level. You can see it rejected and retested here again. Then finally it bought and went above. It came back again, closed still on the zone, retested the zone with this bullish candlestick, and then he started selling again. It came back to the same zone, rejected. This is on the daily time frame. Now the market is back at the same zone. All right, so now two things are possible. One is the market can buy above this zone, buy and close above the zone, or the market sell closes below this zone. So if the market closes below this zone on this daily time frame, there's a very high chance the market is going to sell massively by tomorrow. And also, if the market closes above this zone, there's a very high chance the market will continue buying. Then in that case, we'll have to wait to see the next day's candlestick closing bearish on this zone. If tomorrow's candlestick closes bearish on the zone, then there's a very high chance that the next day the market will buy massively. That is, if the current day's candlestick first of all closes bullish above the zone. All right, so we'll just see one candlestick pull back on the daily time frame on this zone, then market buys. But if that one candlestick decides to close bearish, meaning the market pushes it down to close bearish below this zone, if it closes below this zone, then the buy opportunity becomes invalid. All right, so let's just keep an eye on that based on this time frame. But we can go down to a lower time frame to still spot some possible or some possibilities. All right, so let's go down to the 4 hourly time frame. So on the 4 hourly time frame, all right, so we have this. You can see what we have in the 4 hourly time frame. In fact, looks like an inverse head and shoulders pattern. Looks like an inverted head and shoulders pattern. Like this is the left shoulder. This looks like the head, while this is the right shoulder, as you can see. All right, this is what it looks like. So meaning that this is actually a neckline. Then would want to see the market buying above it, then come back to the retest before it starts buying massively. But there's also a chance that the market can sell from this same zone. We have to go down to a lower time frame to spot, because we have a zone here that was broken and the market is here to retest. It can drag the market down. It can cause the market to come down. There's a zone here, and this same zone here is also a fair value gap. As you can see, there's a zone here and a fair value gap where the market broke out previously. So you can see this is a zone. Let me show you guys. This is actually a zone. How many candlestick? This is a consolidation here. There was a breakout of this consolidation. The market never came back to retest it. So there's a chance the market can come back to retest this level before it continues with the massive buys. It's a very big possibility. And also, if you trace to the left, you see it's almost in line with where we have this previous buy. So the market can decide to come down to do some nice buys from here. But let's look at a much lower time frame to see the possibilities there too. All right, so on the 1 hourly time frame, okay, we can see that the market actually bought and left this market got to this zone and rejected initially on the 1 hourly time frame. This is the first time the market got to this zone. It rejected, consolidated here, then bought again, got back to this zone. Now there is no break of structure, as you can see on that zone. If I use, let me get the crosshair tool. We do not have a breakup structure there. It's just liquidity sweep. So now, if the current one hourly candlestick closes bearish, then there's a very high chance the market will do what? The market will sell. All right, from that zone. The current one hourly candlestick closes bearish. It's a very high chance the market will sell from that zone. All right, so and for that reason, many will be having something that looks like a double top at this point, meaning that we are going to be having something that looks like a double top. This is going to be the first top, and this is going to be the second top, and this will be our neckline. All right, that will be the neckline. So we just can just mark this and wait. Okay, so this is going to be the neckline. I just hope I'm putting this thing properly. Okay, then let's look at the 15 minutes time frame to see what we can get from it. So on the 15 minutes time frame, you can see what we marked initially. It looks like there was a break of structure on the 15 minutes time frame. I don't know if you guys can see, but I need to bring this chart down. Then I need to zoom in. All right, so if you look closely, let me use the crosshair tool. Look how we have the current price. This is the recent high the market created at this point, and there was a break of structure at this point. All right, and now after the break of structure, what can you notice, guys? You can see the consolidation on the 15 minutes time frame. We have a consolidation right here. You see this consolidation, one, two, and this is the third candlestick still running. And this third candlestick, the current candlestick, is left with about 6 minutes to close. All right, so this is a consolidation. Meaning, if we go to a much lower time frame, we may spot, we may see it more clearly, then wait for a breakout. All right, so once there's a breakout of this consolidation, then the market is, I mean, to the downside, it increases the chances that the market will sell. So look at it on the 5 minutes time frame, guys. You can see the consolidation right here. This is the consolidation right here on the 5 minutes time frame. Okay, so meaning if the market can close bearish below this zone, there's a very high chance it is going to sell massively. It's going to sell massively. Now, so two things are very possible. You can, so many things are possible on this chart, guys. The chances the market is going to sell is high, and the chances the market can also is going to buy is a little bit low, a little low. All right, the chances that it's going to sell is high based on what we are seeing here, the double top here on the 1 hourly time frame, although we have a break of structure on the 15 minutes time frame. But always know that the higher time frame structures usually win. All right, then for that reason, if we want to follow based on what we have here on this 5 minutes time frame, then we can sell after the market breaks and closes below this level here. There's a chance you can take a sell from here to make some profit. Okay, you can take a sell from there to make some profit. And also, if you look at this 1 minute, 5 minutes time frame, this looks like a double top too. This looks like a double top. This is first top. Market came down, but to create second top. So it can sell from here and go down massively. But in all, remember that we have a double top on the 15 minutes time frame. All right, this double top is also visible on the 1 hourly time frame, which is this zone that we have here. So if you're taking any entry from the zone at the top, I mean from where we have the current price or anywhere around there, then you have to consider this zone first as your first TP, because the market can possibly hit here, then continue with the buys. So, but for you to be conservative, to take the entry at a very safe, very safely, all right, you have to wait for the market to come down to this 1 hourly time frame consolidation right here. Let the market break and close below this zone. Then the next candlestick closes bearish, bullish. We have a bearish candlestick closing down here first. Then the bullish candlestick closes here. From there, you can take an entry from here with peace of mind. Then you will take the sell. Then we'll be expecting the market to do what? To sell towards this level right here. On the market getting here, you'll make so much profit from it. You can make so much profit from this particular setup. Then know that the market getting here, it can then continue with the initial buys it has been looking at. Based on what we saw on the daily time frame, it can then buy again back to this zone, then continue with the region, with the move to the upside. Okay, so if the market does the other way around, like what I said initially on the daily time frame, if it decides to close bullish above this zone, Then the next day's candlestick closes bearish on this zone. Then the day that follows it, you will have to take a buy from that same zone. Know that the market is going to buy towards this high here. So you stand a chance of making so much profit. So, analyzing the market, there's nothing so 100% about it. Sometimes when you analyze the market, you need to have two options available. If the market goes this way, I'll do this. If the market goes this way, I'll do this. Ensure you set your stop loss, no matter how good your analysis looks. Ensure you set your stop loss because the market can never be trusted. All right. So that's it for this particular pair. So the second pair we'll be analyzing is volatility 75 1S index. All right. So we'll be analyzing from the daily time frame. As you can see, the market is bearish. It's been bearish for a long time now, creating lower highs and lower lows. This is a lower high here. This is a lower low. This is a lower high here, and then we have a lower low at this point. All right, since the market created this lower high, there's been no change of character, because if you look closely, let me bring the crosshair to, there's been no break of structure and there's no change of character. This is the last low the market created. As you can see, we only have liquidity sweep, not break of structure at this point. And then also, I'm not sure you saw that correctly. Let me put this here. You can see we do not have a break of structure. It's just candlestick wicks. There must be a candlestick body closing below this level so that we can confirm, okay, there is a break of structure. The market wants to continue to the downside. And also, or the market has to buy above this particular level here, so we can say there's a change of character. All right, so for that reason, the market is still bearish overall. But we're going to be looking at the current side of the market. This structure right here, after the market bought impulsively, you can see an impulsive buy from down here up to this place here. Then after buying making this impulsive buys, what we have here looks like an impulsive correction at this point. Looks like an impulsive correction. So there's a very high chance the market wants to sell back from this level to maybe somewhere here, because if you look at this high we have right here, this high here, and then the market started selling nicely from it. Finally, it bought and went above this level. This is like an internal change of character. All right, this is an internal change of character, while this is the other block that we had around it. Yeah, so the market will possibly want to sell down to this other block level before it starts buying massively. All right, so we can just take note of this other block by marking it with a rectangle. All right, put the rectangle there too, and take note of it. Then we go down to the 4-hourly time frame to really see that structure correctly. All right, so you can see the structure we're talking about there. Then on this structure, we will have, you can see we had break of structures. We had some break of structures to confirm the market was still bullish. All right, we see break of structure here, and this is another break of structure at this point. We have a candlestick body, like the bullish candlestick closed above. We have that line. So we will place our trend line here to mark this structure, to mark the highs. Then we also put another line right here for the lows. All right, we put another line right here for the lows, and doing that, you can see that we have a structure, a pattern, a chart pattern that signals a reversal. I think they call this dependent. But although where the market is buying from currently is a strong support zone, the market is rejecting from a strong support zone, and looking at what we have, it looks like a double top. Guys, look at this. It looks like a double top here. This is the first top, this is the second top. So meaning there's a chance the market would want to sell. The market want to sell. But right now, if we want to depend on this, we have to wait for the market to break and close below this zone first. All right, the market has to break and close below this zone. The next candlestick retest this zone, then we take a sell. If you're taking a sell from here, you can hold the trade to as low as this point. Though to be safe, you can take your profit around here, but there's a chance it can sell down up to this level right here. And also, now that the market is buying, it's not ready to sell immediately. All right. For those of my students that understand the engulfing candlestick strategy, you will know why the market is actually buying from where it is. You know why the market is buying from where it is. All we have to do now is to mark this zone, because there's a zone right here. There's a zone here. The market wants to buy to possibly retest this zone, because there was, you can see market reacted here previously. Then we have some rejections. After rejections, the market then bought and closed above this zone. You see the buys up to this level. Then the market came back and retested this same level. You can see the rejections here again. then it sold massively down to this level. So I believe the market would want to go back to do a retest on this level before it starts selling massively. So all you have to do is to patiently wait for the market to actually go and close above, get to this zone. On getting to this zone, we can go to the lower time frame, like the 15 minutes time frame, or even the 5 minutes time frame, to spot any form of maybe change of character, or even on the 1 minute time frame, or maybe a double top there, or um, head and shoulders pattern on that lower time frame. If you're able to spot any of those on this zone, then it's a clear signal that the market would want to sell from this level. So from there, you can take an entry from there. Remember, your first TP should be around there. If you're taking the entry from here, set your stop loss just a bit above where we have this wicks here. Then your first entry should be somewhere here. Then the market has to sell to the, once it sells to this zone, you can take part of your profit. You can take part of your profit here, but there's a very high chance the market would want to sell massively down to this level. All right, so this is just analysis for this pair. The market might go a long way. You can still make something reasonable from this particular trade if you follow it nicely. This is okay, this is not the minimum lot size. The minimum lot size for this particular pair is 0.05. Though the last time I traded, I used 0.2. That's why I'm having 0.2 there. So if I'm taking an entry from there, then if I'm taking profit, that should be $28, guys. All right. Then if I am holding a trade up to this level here, this should be about $90 with just one position, or with 0.2. This lot size is big. All right, the minimum lot size is 0.05, so you have to be careful. Enter the lot size according to your account size. Don't be in a hurry to make so much profit, or you can open multiple positions and take some profit, bits of profit, and then step out if you're not confident, or you're not you are scared. All right, so these two setups I just shared with you guys, I'm hoping they will play out so well. Even if you're watching this video when they had already played out, just learn from them, apply one of these things, apply them in your original strategy, or just try to follow what I'm doing. All right, there's a very high chance you'll be successful. All right, or if you want to learn it in a most smarter way, try to contact me for a private mentorship. All right, then I will I'm just looking for a way to repackage my private mentorship so that I ensure my students get the best out of it. So if you are interested, click on the link in the description of this video. It's going to take you to my Telegram channel. From the Telegram channel, you'll find my direct contact to either reach out to me either on Telegram or on WhatsApp. The WhatsApp is even faster. All right, so just do that, guys. I will see you guys in my next video. Stay blessed. Like this video, share it in the comment section. Peace out.